We've been working on this new version of Orderflows Trader. This is Orderflows Trader 6. Since 2015, we've come out with several upgrades over the years, and they've always been free to our users. I'm a big believer in not just creating software, but you always want to be improving it, right? Make it better than it was in the previous version, by adding more forms of order flow analysis. And it still shocks me because I still see a lot of the software out there, that's on the market since I first released the Orderflows Trader software in 2015 that still looks the same. And it's just one of those things that it's like, where's the innovation? I mean, are people that creating the software using it for trading, or are they just software creators? They just want to get a product out there and that's it. For me, the whole point of creating the Orderflows Trader software is because I was trading with Orderflow, and I know that software, you can tell it what to look for. You can tell it to do things for you. So, when we first released the first version of Orderflows Trader in 2015, it had 4 forms of order flow analysis built into it. Now it's got over 20, and it's just been remarkable because sometimes some of the concepts or ideas that you see in Orderflows Trader come from my conversation with other traders that are using the software, saying, Mike, maybe we could make this adjustment, or hey, can you show this? And it's really been developed to help traders understand what's happening in the market. So the way I like to describe it, Orderflows Trader 6 is something that's going to take you by the hand, and whether you're a beginning trader with order flow or intermediate or even advanced, it's going to take you by the hand and get you to where you need to be in market analysis. Sometimes I tell people, this is as close as you can be to having me sitting next to you saying, hey, you know what, looking over your shoulder, pointing at your screen, this is happening in the market, that's happening in the market. Now, the Orderflows Trader software is, I said, now the big change in the software is we're able to plot things in the order flow. And when you're looking at a chart, you're going to see up and down arrows. And I'm going to get to the live charts here in a second, but I just want to sort of ease you into it because it is a big change for everybody. Because previous versions of the Orderflows Trader didn't have that ability to disable certain functions and only put on the things of the order flow that you want to look at. In the past, it was always concentrate on the things that resonate with you. Well, now it's going to take it a step further. You can concentrate on the things in the order flow that resonate with you, and you can take off the things of the order flow that we've already got in the software that you don't really look at. Okay, say you don't want to look at order flow sequencing. You can take it off your chart. And there's a lot of functionality that goes along with it. So just really quick, the 19 order flow based forms of analysis that we have in the Orderflows Trader software that are plottable, meaning it's going to plot the up and down triangle, which is useful if you're using like a strategy software, strategy analyzer, things like markers, etc., that need to read a plot, right? So if you're building a strategy around it, and it's the prominent point of controls, the order flow tails, the delta divergence, exhaustion prints, the imbalance reversals, market sweeps, market weakness, order flow sequencing, the POC slingshot, the zero prints, value area. Well, I mean, every bar is going to have a value area. I don't know if you need to plot it, but it's there. I haven't done any strategies with the value areas, but it's probably going to get to that point. I think in the next, we're doing a lot of stuff with the value areas that down the line it's going to be very useful to you. The engulfing value areas, inverse imbalance, stacked imbalance, thin prints, the order flows ratios. There's 2 types. There's price exhaustion, price defense, and the multiple imbalances. Now, we've also added a new indicator called thin prints. And we've made improvements to things like the value area, the inverse imbalances, multiple imbalances, the order flows ratios, the price exhaustion and price defense. Now we also have 3 new visual what do you want to call it, analysis tools, and it deals with the delta in the bars. And these are not plottable, but what they do is they enhance your understanding of what's happening in the market. And it's the delta divided by volume. And actually, we even have there's actually another thing in there, the delta divided by volume on the extreme, which I'll talk about. We have extreme deltas, which is when delta is near to its highest reading, or either positive or negative, meaning that the aggressive traders were overwhelmingly dominant in a bar, either buying or selling. We have small min-max delta readings, which indicate to you when there's a lack of min delta or lack of max delta. And why that's important is because when you lack aggressiveness, one side or the other, every bar is going to have aggressive traders, buyers or sellers, in the bar. But when it's really lacking, right, that's also a sign to you. It's one thing to have very strong delta directionally, either positive or negative, but when you have absolutely no positive or negative strength in a bar, that's also something you want to key in on. Most traders only look at when something is strong or weak, but really what you want to look at also is when there's lack of something happening in the order flow. Now, these indicators were developed to help traders understand the strength of aggressive trading taking place in the market. So delta is the difference between aggressive buyers, aggressive sellers in a bar. So any clue to determine when one side is either very strong or very weak is going to help you understand the current market conditions. All right, so enough of the screenshots. Let's take a look at some charts. Now, for those of you that already have the Orderflows Trader software, all you have to do is just simply uninstall and install the new one. And it's a simple process, honestly. It's all you have to do if you were going to do it, you would just go to your NinjaTrader control panel really quick and go to remove Ninja Script Assembly. Under the tools, it's going to pull up that box. You just scroll down to it and you find it, and you just click on there and click remove. To install it, what you have to do is you just download the zip file in the link that I give you, and you just simply import the zip file. You don't need to unzip the file and look around in there, because that's not how you import an add-on into NinjaTrader. You just go to tools on your control panel, click on import Ninja Script add-on, and then just find where you saved it. Usually I'll save it in my downloads folder, but you just find it and then you click on OK, and then it'll take literally about 30 seconds to import. And then you're going to enter your license. So once it's in there, then you just enter your license token, and you open up a new chart. So just go through the whole opening up the chart process, because it's very easy. You do not need a template. You just make sure you have tick replay enabled. And if you don't have this choice of tick replay, sometimes people don't realize that they think they don't see that, they think it's on there. But if you go to your tools and options, market data, you see this thing, show tick replay. It's got a check that knows that it's going to show it to you. If that is unchecked, when you go to open a new chart, it's going to not give you the choice of using tick replay. You see nothing here. So what you have to do, if you see nothing, that doesn't mean it's on, right? That means you need to go in and enable it. So you just go there, check that box, enable tick, show tick replay, and then you just go to open up your chart. Gold, in this case, I'll do gold. You don't need to do so many days. Just the last couple of days or so is fine. You don't need to load 30 days. I know some people like to do 30 days worth, but remember, every time you open up your charts and you have 30 days worth of data downloading, historical data, it's going to take a while. Okay, it's not going to be instant, because the Orderflows Trader software is using the tick replay, so it's got to analyze that data and put it into the chart. So we'll just do a simple, regular, NinjaTrader chart, right? The default for NinjaTrader is black. Okay, well, we don't read black newspapers with white text, right? We read the opposite. We read, black text on a white paper. So I'll show you how to change that in a second. But just to load the indicator, all you have to do is you just open up your indicator setting, go to Orderflows Trader, and click. So make sure it shows up down here under configured. Then you're just going to enter your license token. Again, that's in your email, and then click apply. And just wait for it to load. Again, the first time you load a chart, it's got to pull in the data, so it may take a little while. Now you're going to say, I can't read this. That's because the chart is optimized for a white background. Again, I think it's easier on the eyes. If you're staring at a chart all day long, like me, and I've done pretty much my entire professional career, I prefer the white background. It's just easier. Now, to change it, what you do is you click on properties, right? So you don't need a template, right? This chart, the default settings of the Orderflows Trader is set up for a 1-minute E-mini chart, which is fine for every market. If you're trading NASDAQ, you're going to adjust a few things, depending on the market you're trading. But for most markets, the default is fine. So you open up the properties, scroll down the middle, you see colors. Chart background is black. You just change it to white. Okay. Crosshairs label, you don't really need to worry about that. But the one you got to change also is text, right? That's the text on the side of the chart. Slate gray isn't going to do you much good. I prefer to change it to black. Also, the axis, right, is slate gray. The axis is this line on the sides, on the bottom and the side. When you have a white background with slate gray, you can't read it. Change that to black. Crosshairs, again, you're going to want to change that to black. The other thing is the font size, right, for the time and the price. I prefer something bigger. You can just change it to something like 16, and that's it. Boom. Simple. All right, so this is your chart here. Let me just, what I got in the background. This other chart here is crude, but we'll stay with this gold chart. Now, we've got a lot of tools inside the Orderflows Trader 6 version, okay? And we have some global settings, which these settings up here control everything that you're going to see inside, all the different indicators. And basically, the signal spacing and ticks, which is the plots that are being plotted above and below a bar. One is fine, don't need to change that. The value area percent, because we have some value area tools, right? We have the engulfing value area and we have the regular value area. Default is set to 70, which is 70%, which is fine. I mean, some people look at value areas of 50% as well, so it's up to you. But 70% is, the one standard deviation that you're going to look for. Minimal imbalance volume, and what this one is related to anything imbalance related. Imbalance reversals. We have inverse imbalance, stacked imbalance, and just regular imbalances. Actually, on the inverse imbalance, we do also have that setting in here, but you can control it from up here. And what that means is 10. So, for example, if you have a price level in a bar, in the two-way auction, let me find one here. We'll call it, where's it? 1 against 8 right in here, right? 8 on the bid, 1 traded on the offer. Well, even though that's an imbalance, by setting the minimal imbalance volume to 10, it's got to be at least 10 here, right? So 8 doesn't qualify. But if it was set to, say, 5, meaning you could have 1 against 5, then it would show an imbalance. I sort of like to have, a bit stronger imbalances in terms of volume. 10 is about as minimum as I think you want to go. But if you didn't have that turned on, 0 against 1 would show up as an imbalance, which is not really something you want to, really look at. 7 against 0, yeah, that's an imbalance, but it's only 7 contracts, right? So at least having 10 is enough for to qualify. But again, you could set it as low as you want. I prefer a setting of 10. Now the imbalance trigger in percent, default is set to 400. That means an imbalance of 400 to 1, or sorry, 4 to 1. So it's 400%, not 400 to 1. It's 4 to 1. Again, you could adjust that. Say you want to use 3 to 1, you just change it to 300. Again, it's in percent, so it's 300%, meaning it's going to be 300% greater. If you want a higher number, 10 to 1, set it at 1,000. Okay, and again, that imbalance trigger in percent is going to affect anything that is imbalance related, imbalance reversal, inverse volume imbalance, the stacked imbalances, the down here we've got volume imbalance, right? We've even got the multiple imbalance in the bars as well. So those are those global settings. Now, again, we've got a whole laundry list of indicators programmed inside of the Orderflows Trader. Now, the default has some enabled, some disabled, and these are the ones that I focus on in most markets. Okay, now things that are disabled, like market sweep. Okay, I disabled that because I know there's a lot of people that trade MNQ, YM, some of the thinner indices that just don't trade a lot of volume. And if you're not trading a lot of volume, you're going to see a lot of potential sweeps. And the reason being, when there's not a lot of volume, people are buying it up and selling it down through several price levels at once. And technically that is a sweep, but that's not the type of sweep that I'm looking for. I'm really looking for sweeps, in sort of normal conditions that sort of come out of nowhere. Okay, and what that means is, S&Ps are just sort of plodding along, and then all of a sudden a big buyer comes in and buys it up through 4 price levels. That's the sweeps that I'm looking for. But again, it's disabled just so as not to necessarily confuse people right off the bat, because it can really clutter up a chart on a thinly traded market. Now, a couple of the other ones that are disabled is thin prints, even though this is a new indicator and it's meant for markets that trade decent volume at each price level. So like crude oil here, right? This is a crude chart. Well, granted, it's Monday morning, Columbus Day. A lot of traders are off today. So you're going to see, not necessarily a lot of volume going through at prices. So thin prints is designed to look for thin areas in the order flow, right? So obviously something like 000, like right in here, is technically a thin print, but it's also due to the fact that today is kind of a quiet day. A couple of the other ones that are turned, or say turned off, but disabled. What is it here? So thin prints, unfinished business. I don't turn on. I don't use that. Where is it in here? Right here. It's there if you want. I don't also throw up the volume profile on my chart, but it's there as well. So let's sort of take a look at some of these things. Now, all of them, right? You'll see have a check here to enable the indicator, right? If it's enabled, it'll have a check there. If it's not enabled, it won't have a check. Now, some like the buying and selling tail also have a couple extra filters like check EVA, which is engulfing value area, or check higher high or higher low, meaning it's, check EVA means if you have tails enabled, it would only signal if there's an engulfing value area, which is useful in markets like mini Dow, right? When you have a tail, buying or selling tail in a bar with a engulfing value area, it's a pretty high percentage trade. That's why we have it in there. Check higher high or higher low, meaning it would have to be, the tail would have to come in at either a higher high for a selling tail or a lower low for a buying tail. Now there's draw modes on everything, right? You could draw out the zones of every indicator in here. Most are fixed to appear just in that bar. Okay, so you could see fixed with a zone size of 1, meaning that it's just going to draw in that bar. Now, if you were to change it to, say, a zone of 5, what it's going to do is it's going to draw it out 5 bars starting at the bar that it appears. So if you have it set to 5, it's going to draw out, over the next 4 bars, as you can see. Where is it here? There's one right here, right? Just drawing it out over the next 1, 2, 3, 4. So it's a total of 5 bars. Now, the other feature that we've made available for all of them is to draw it out until tested. And if you draw it out until tested, doesn't matter what you put in the tail, the zone size, because it's going to draw it out until tested. And I like to use this until tested for many of the indicators. Now, I don't put them all up on my chart because it's going to draw out a lot of zones. But as you can see here, there was, this zone, right? How the market oftentimes will come back to these areas, right? This is another selling tail right here. The market just, it came right back to it. This is a tail from earlier. You can see how the market got right back within 1 tick of that selling tail here, right? This was at 8 in the morning. We came literally 1 tick into that zone, right? 1 tick off of it, and then, reacted. This is a buying tail, just sort of went right through. But again, you can just see these areas where, the market just, again, comes right up to these areas. This was another one, right? We got within 1 tick of getting into that zone. It's useful for targets, say you're long from an area. Okay, well, I know I've got this overhead zone up here, or some people actually, will throw offers or bids in the market for a retest of those zones. Now, let's pull up the indicator settings. So it gets tricky, I'll admit, because you got a lot of different indicators, and you're trying to keep the color scheme manageable. Because generally for, I remember when I was trading Globex back in the early 90s. I went through like a stretch of like almost every day for a week and a half. I had silly ticky-tack errors of buying when I should have been selling, because I was really just looking at the screen and not looking at the buttons on the keypad. I was just, pressing the buttons, and they're just stupid errors, but it's just like it's a loss. Okay, it'd be a scratch, or maybe I'd lose a tick because I should have bought or sold. I was buying when I should be selling, and my boss asked me, "What's your problem? Are you colorblind or something?" Blue means buy, red means sell, and it's just one of those things. Or green actually is and the old system was for buys. But generally, blue is something that's bullish, red is something that's bearish, and we're trying to keep all these indicators, along that line of green or blue for something that's bullish or buying, red for something that's selling. Now you're going to see some like the delta divergence, which is gold color. Okay, and again, you can adjust these colors however you like it, right? Market weakness, I've got kind of this blue, violet, and dark orange, but again, you can adjust it however you want it, right? But mostly you'll see are some sort of shades of blue and red, cyan and magenta, even for the prominent point of controls. Again, but it's up to you if you want to change those or not, because if you change them, the plots, whatever color you change it to, is going to color the little up or down triangle, right? Blue triangle here, the red triangle there. It's going to color it that color. Okay, so with a lot of different sort of indicators, if you're got each one is a different color, then you're going to be sometimes you're going to be more worried about what color, what color is that, and what does that mean, as opposed to, if there's something bullish. Because to be honest, once you start using the software and you get used to it, you start seeing, okay, yeah, I've got a I've got a red triangle, I got this one, I've got this one here, I got 3. Well, what does that mean? Well, okay, I can just look at the bar and say, okay, yeah, I've got 3 bearish things in the order flow here. What do I got? Well, I know I got sequencing, I got a bearish slingshot point of control, which is that one, and I've got an exhaustion print. Okay, just by looking at the bar here, this green candle, I've got, 1 green triangle. Oh, yeah, just look a little closer. I know I've got this exhaustion print here. Okay, like here, I got a bearish prominent point of control on this bar, and I've got a bearish EVA here. Okay, now as long as it's bearish and bullish, I think, you know, over time, you'll pick it up really quick. Now, the delta divergence, right? In the past, the previous version would just draw a little triangle above or below the bar. I've changed it a little bit and I've made it gold color. And when it's gold color, let's see if there was one here this morning. This is gold as well. Let's see. I have to go back to the evening time. We'll go back to the previous day. I think there was some divergence. That's, where is it? I'll tell you what, I should just throw on the open. You know, Ninja Trader, one of the nice things they have is this current open day high, low, close. It's good to have that on your chart. Because obviously the day's high or low are important reference points. You should always be aware of where we're trading. Okay, so here, let's open this up. You can see it right down here on this low. The bottom two price levels are colored gold color. Okay, you can see the little plot is a gold color plot. That's your delta divergence. Delta divergence is a new or equal low with positive delta. So you can see here, right, positive delta 496. You can even see this one's got 1, 2, 3, 4, 5, 6 bullish things in the order flow, right? Out of the ones that are enabled, you know, that's a good sign, right? Now, I don't want you guys falling into this trap of thinking, oh, you know what, this one's got 6, it's got to be an automatic buy. You still got to follow what's happening in the order flow, okay? Don't just say, well, you know, the more the better. Yeah, in theory, but you don't want to just take every single bar that's got 4, 5, 6, you know, plots of things happening in the order flow. Now, one of the other differences, again, all the indicators, you can draw out the zones, right? So again, it's set to 1, but since a delta divergence is going to come at a higher or the low, maybe you want to draw it out until tested. So just sort of remind you that, hey, you know what, the first time we were there, we had a divergence. Let's see what's going to happen, you know, sort of the second time if we get, you know, close to that level. So it's, you know, obviously it's the low of the day here. You know, nothing there. Then the evening session, right? You can see here, right? You got this divergence, Just gives you an area, you know, something else to look at on your chart. Then just sort of go through exhaustion prints. You know, exhaustion prints have been around since the first version of Orderflows Trader, and what it does is it draws, you know, it draws the box around the exhaustion print in the bar. At the top offer of the red candle, the bottom bid of a green candle. Imbalance reversal, it's a little bit different here. You know, in the previous versions, we used to draw an up or down arrow. Instead, what it does here for bullish imbalance reversals and bearish, it will draw a box, either light green or red, around the top for selling imbalance reversal. It's going to draw down a red candle at the top two prices. On a bullish one, it's going to draw it on the bottom two. Let's see if we can find one here. Let's see. Okay, right here, this is a bearish imbalance reversal coming in right here. Okay, that's why you got this red triangle here and the box over the two price levels there. Okay, and again, you know, if you want, you can draw out, again, for a visual, you can draw it out until tested. All right, let me just turn off some of these other ones here. And it's going to you know, draw out, where is it? Oh, sorry, that was the exhaustion print I turned on until tested. the imbalance reversal one until tested. Some traders I know like to use the exhaustion print and draw it out, since a long time ago. But it's just amazing how oftentimes you see the market just come right back to these levels. That's why we started drawing them out, because I know some traders have been telling me, Mike, I'm using the exhaustion prints, or I'm using this, and when this happens, it just kicks off a nice level that I could look to trade around, if it comes back up to that area, right, like right here, things like that. So it's just an added feature that to help you understand what's happening in the market, and ideally take better trades. Okay. Again, you can see each one is going to plot, right? So if there's that thing happening in the bar, right? Whether like here, right, your divergence in a ratio, right? You got the gold up triangle, the blue up triangle. Okay. I'm going to get to those ratios in a minute, but to sort of run through some of these things real quick. Inverse imbalance, right? This is one of my favorites, and the default is drawing out until tested. Okay, so and it's set to 2 clusters, meaning if you have 2 opposite imbalances in a bar, meaning if it's an up candle and you got selling imbalances, that's what's called an inverse imbalance, because you have an up candle, you're looking for buying imbalances, not selling imbalances. And same would be for bearish, right? You'd have a down candle, but you got buying imbalances. Well, what's causing that is traders are getting trapped, because you have people coming in offering supply to absorb whatever aggressive buying is there, and that's weighing on the market. And I know earlier here in the crude there was one that came in. Where was it? Right here. This is an inverse imbalance. Okay, buying imbalance at the top of this red candle, and this is a nice setup for these markets that sometimes have a lot of volatility, but it's also a sign of supply coming into this market. This market's selling off, and you can see people are offering it down. You got this 34 lots, the 21, the 80 supply coming into the market to keep this market from coming back up. When it comes back up, it gets sold back down, right? So again, it's the brain processes images much faster than processing numbers, because if you got to sit there and think, okay, what's happening in this bar in the order flow, like right here, right? This one is being drawn out from, gosh, who knows where? Where is it? I saw that. Where'd it go? There was a buying one here, this one. 1704. Right here, okay? This is a green candle. You got the 2 selling imbalances. Traders are getting trapped down here. They're getting overly excited. The market is selling off, and they're coming in here selling it. But there's passive buyers that are absorbing that selling. That's why it's drawn this blue color to tell you, hey, you know what? This is a bullish thing that's happening in the order flow. And you see the market it reacted. I'm not saying, oh, because 40 contracts got sold down here that it caused this massive reversal, but it was a sign in the order flow that, hey, you know what? Traders are getting a little bit overextended. Some traders are getting trapped down here. The trade is to the upside, right? And it shot just straight up. You also got some other things happening, excuse me, in the order flow. You got that exhaustion print. You've got the tails as well going on in there. So, inverse imbalance is something that I've been using in my trading for a long time, and it's quite useful. And you want something that's going to show it on your chart, as opposed to show it easily. I mean, it's there on the chart if you have a regular footprint, but again, honestly, if you're looking at, close this down, if you're looking at a footprint like this, right? This is crude oil. This is a 1 minute this is the, the volumetric chart from the order flows from the NinjaTrader 8. Okay. Well, first of all, you got to do a lot of customization to understand what you're looking at. But it's like, okay, you really got to, this is why people, they get a chart like this, and this is why they discard order flows, because they don't understand what they're looking at, and trying to put it together, put the pieces together, understand what's happening, it's just too much, because what time was this? This was on, well, this is gold, but if I were to pull up the gold chart, just go back to what day was that? That was I think Friday. At what time? 9:39 here, right? Let's make it bigger. This is the volume here, 30 against 4, 30 against 4, 10 against 2, 10 against 2. You're not going to pick that up. That's an inverse imbalance. That is something you should get long. You're probably not going to notice that there's a tails here, or there's an exhaustion print in here that's bullish for the bar. I mean, there's a lot of bullish, 3 bullish things happening in this bar that, unless you're like an expert at reading the order flow, you're not going to pick it up, right? But if you have a tool, right, like the Orderflows Trader, it's there, right? It just stands out. It's so obvious for you to see. Okay, let's just go through a couple more of these things. So what was that? That was inverse. Now the market sweep detector, again, is disabled. To enable it, just put a check there. And again, I'm going to keep it at, I'm going to keep it very tight. I'll just keep it at 2 for this sweep threshold. They'll probably get a lot of sweeps in the market like gold, because it doesn't trade a lot of volume. It's really meant, this sweep detector is meant for things that trade a lot of volume, like what do you call it, S&Ps. But you can see here, right, bullish sweeps are going to be green, bearish sweeps are going to be red. Now, here's a bullish sweep, here's a bearish sweep, here's a bearish sweep, here's a bullish sweep. The thing to keep in mind is when you're using something like sweep detector, sweeps are momentum based. Okay, someone is buying it in a direction. You want to see the direction keep going. You have a bullish sweep, you want to be trading above it. Okay, you have a bearish sweep, you want to be trading below it. Now you can trade into it like this, but when you have a bearish sweep and the market is closing above the sweep, that's not a good sign, because it's sort of rejecting it. And again, sort of what's causing the sweep is kind of lack of volume, honestly. But when you have a bearish sweep, you want to be trading below it. If you're trading above it, you don't want to be in that trade. Right? Here's your bullish sweep. Obviously, we're closing above it. Okay, it's a momentum trade, and you're trading in the direction of momentum. If you have something that's bearish, market should be going lower, not going higher. Just as if you have something bullish, the market should be going higher, not lower. All right, so again, by default, that is disabled, more of an advanced thing for traders. Now, the market weakness detector is also drawn, so it's enabled, it's drawn until tested. It's blue, violet, and dark orange. Sounds more, yeah, I don't know what the word is, but it's one of those things, it just stands out, right? Because really with market weakness, you just want to be alerted to it, right? And then trade it from there. And I just found that color scheme, this line here is market weakness. You see the market came right back up to that area and it's just sort of hanging around there. But when it appears here, right, you see how the market had a nice sell-off. This is a bearish one right here. And it's going to draw it out from the top of the bar, not from the whole bar itself. Again, when drawing out these zones, we also had to figure out, where do we want it to, how do we want it to appear? At the top or bottom, etc. Because I'm going to show you guys something when we get to the ratios. Here's some market weakness, bearish one. Let's see if there's any bullish weakness. I think, here. This is a bullish market weakness here. We got this little bit of a rally, but mostly went sideways. Came right back to that level, to the bottom of that bar where the weakness first started. and then went back up. So that's market weakness. Now, sort of moving on, some of the other indicators. Sequencing, right? Again, one of my favorites. Its default is on, it's enabled, and you can see in the bars, right? This is market bearish sequencing here. The cyan in the bar. Let's see here. This is today already. Let's see if there's any bearish or bullish ones. You know, on days that are kind of quiet, here's a bearish sequencing coming in there. Here's a bullish one. Not a whole lot today, but again, you could also draw it out until tested, which, you know, again, is one of those things that, you know, for some people, you know, being visual is something that's going to give you an edge, right? You want to be the best trader that you can be, and having literally something right in front of your eyes. You know, you see how the market, you know, here's bearish sequencing, came right back up into that area. Sequencing is when the market is taking out subsequent higher and higher volume levels or lower and lower volume areas. So if the market trades back in there, right, you want to see these areas where the aggressive selling was holding, right? You see rallied up, came back off, rallied back into that zone, came off, okay? So that's sequencing. And again, you know, I've done a lot of videos on sequencing. So you should check those out if you want to learn more about sequencing.